Gaurik, you mentioned about the comparison with arbitrage. How about equity savings funds?
Against equity savings fund, I would say it has a better downside protection. So one thing again, there's other thing which you have to understand are options and what kind of flexibility this SI brings in. Most of our mutual funds or all of our mutual funds are a linear products. What I mean by that is equity mutual fund, right? Equity mutual fund will typically move along with the market. It will have almost 1% capture ratio. One capture ratio is upside and down. But typically it will have a similar upside and similar downside as the market with the market. BAF will have around 50-60% participation on the upside and same 50-60% participation on the downside. It will be based on the fund manager expertise and all, it could be little bit higher.
Who's a 1% BAF would roughly move up?
0.5, 0.6. Okay. Over a period of time, that is what we are talking about. Equity savings fund will be conservative, so it will have a 30-40% participation. On the upside also it should be 30-40, and the downside also 30-40. Now with this strategy, because of the options, what we have is there will be upside participation will be 25-30%, and the downside participation will be 5-10% or lesser than that over a period of time. That's the essence of it. On the upside, it will be slightly lower than equity savings fund, but on downside, there's a much better protection.
That's amazing. I haven't heard anybody quite explain this in this way before.
Okay.
The asymmetry of upside and downside capture is what distinguishes
SI. Yes.